Good evening, everyone. I am CA Aishwarya Joshi, the moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for the webinar on double entry accounting system in urban local bodies and significant beneficial owner under Companies Act 2013. In a short while, we will start this webinar. First, I would like to appraise you about CPE committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICAI continuously aims at developing knowledge edge so that the members stand out to the expectations of the society. To achieve this objective, the CP Committee of ICAI has been continuously striving for perfection, integrity, knowledge, which make the word chartered accountant synonyms with excellence in service. In this direction, CP Committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. The program for this evening is as follows. We have two sessions, 1 hour each, and the topics are double entry accounting system in urban local bodies and significant beneficial owner under Companies Act 2013. Our eminent speakers will talk about the above mentioned two emerging areas of professional interest. Let me introduce our first session speaker, CA Rija Agarwal. She is distinguished CA with over 21 years of experience in municipal finance, auditing, and consultancy. She has been a key contributor to urban financial reforms, having collaborated with the Ministry of Urban Development, Government of India, to train over 5,000 municipal officers over 60 cities under the Amrut mission. Her expertise extends to managing large-scale government projects, including serving as Uttar Pradesh Head of Finance for the Swachh Bharat Mission, where she successfully handled a 1,200 crore budget. Additionally, as a senior partner at Rija U. Agrawal and Associates, she has led high-impact audits for nationalized banks and PSUs, driving financial efficiency and compliance. Beyond her professional practice, she is certified trainer and a guest faculty actively mentoring professionals in double entry accounting systems and financial management. Her deep understanding of urban local body finance makes her the perfect expert to guide us today. Ma'am, I welcome you on the behalf of CPE committee. You can share your screen now.
Thank you so much, CA Aishwarya Joshi, for giving such a deep introduction of myself. Good afternoon to all respected members of ICI. I express my sincere gratitude to CP Committee, ICI, for providing this opportunity to me. Without taking too much time, we will be straight moving up to the topic for discussion, which is DEAS in ULBs, or in we popularly known as double entry accounting system in urban local bodies. We as chartered accountants, we all are aware what is double entry accounting system. It is the system that urban local bodies in India use for recording the financial transactions. The system is based on accrual basis of accounting, which means that the transactions are recorded as and when they occur and not when they are paid or received. Why double entry? To improve the financial management in ULB, to ensure that financial statements and books of accounts are reliable, objective, and complete. What happens with the double entry system in case of a ULB? We all must be remembering about real accounts. In case of real accounts, the basic accounting rule was the receiver is debited and the giver is credited. Debit the receiver and credit the giver. So similar happens in the case of an ULB. When a ULB receives money, it is debited, and when a ULB gives away money, it is credited. In case of a ULB, the real accounts, we have the tangible assets. What are those? They owe vast stretch of land. There are number of buildings under each ULB, and to add to it, there are vehicles for different purposes. So all these come under tangible real accounts. The CAG, or the Comptroller and Auditor General of India, has formulated accounting and budgeting formats for ULB. They are covered under the accounting system of urban local bodies, which we'll be discussing in a little while after. Previously, most of the urban local bodies followed cash basis system of account. What is the need for this transition from cash basis of system to accrual based double entry accounting system? So it fulfills the basic rules: transparency and accountability. You all must have heard about the financial statements that are normally prepared. The basic accounting statements are income and expenditure statement, balance sheet, receipt and payment account, and cash flow statement. In the case of ULBs also, these four statements are prepared, which has been deliberated by NMAM. What is NMAM? It is the National Municipal Accounts Manual. We will be detailing it in a little while after. Mainly, the session will be divided in 4 subtopics: budgeting, internal audit, expenditure management, and service level benchmarks. The first being budgeting. What is a budget? We all know what is a budget is. So budget is a statement of income and expenditure. Similar is the case with urban local government. However, with the 74th Constitutional Amendment, 74th Constitutional Amendment gave the constitutional status to urban local governments. And by this, different states created the legislation for transferring the responsibilities of local infrastructure to this tier of governance. With the implementation of the 74th Amendment, urban local government has been classified into a three-tier system. For areas where the large urban areas, we will specifically say, there are municipal corporations. For medium level cities, there are municipal councils, and for the smaller ones, there are Nagar Panchayats. Municipal corporations do have the maximum degree of physical autonomy. They have specific physical and financial powers, however, which may vary to a certain extent among different states in India. So the municipal budget reflects about income sources. What are the income sources? Here we have listed some of the functions of municipalities. The income sources will tax revenue or non-tax revenue. Grants may be there. Loans may be there. And what will be the expenses? They will include water supply, waste management, sanitation, and so on the list continues. So, as in general, we know the budget document shows the details of income or receipts and use of these resources to different heads. On your screen, you can see the different sources of receipts or income for urban local bodies. As we have discussed a little while ago, they include tax revenue, non-tax revenue, grants, and other receipts, or maybe a share from the central government or state government. You all might be remembering about JNNURM. The logos were visible on so many buses, on the hoardings. Now the mission has been renamed to Amrit. This double entry accounting system meets the conditions which were laid down under JNURM and the 12th Finance Commission, which in compliance of the same was there for release of performance grants. We are here discussing about the process improvements and later the strategies to optimize the financial management in ULBs. What are the problems which are mainly faced by ULBs? Is data inconsistencies and inaccountability issues. The key challenges include lack of qualified staff, inadequate infrastructure, and again data management issues. A PFMS, a real-time web-enabled online accounting system, has been given by Government of India under the flagship program to overcome all these difficulties. Some ULBs are using softwares like Excel and Tally. However, under the flagship program, there is PFMS, which is a user-friendly data entry system for accounting purposes. The daily procedures include entry of all the transactions which are made. Daily the cash should be balanced. When we move to the monthly procedures, reconciliation has to be done for the banks as well as expenditure against the permanent advances are to be recorded. And what will be the results? Results will ensure transparency, efficiency, accountability, improved decision making, and finally, optimization of public funds. There are certain quarterly procedures which are followed, and the annual procedure is depreciation. We all are well aware of it. We are not going into details of the same. There are multiple fixed assets under a ULB, and proper depreciation has to be accounted for. So overall, we can say that a municipal corporation's budget is the tool for governing the urban finances to ensure that the funds are allocated to the priority areas as infrastructure development and healthcare. Budgets can be further classified into revenue budgets, capital budget, and expenditure budget. A well-planned and monitored municipal budget ensures financial stability, sustainable development, and improved urban governance. Further, we are speaking about internal audit. Internal audit play a crucial role in enhancing financial accountability. As CAs, this is the opportunity we can take up. As part of double entry accounting system, ULBs are required to appoint internal auditors. Regular internal audit help in identifying the financial irregularities. They ensure that the statutory norms are complied with and financial resources are utilized for their intended purpose. Now the audit reports under the Amrit Mission are to be published on the municipal body's website, allowing the public scrutiny. It further enhances the citizens' trust in the local governance system. On your screen, you can find a extract from a municipal corporation's budget just for academic purposes. Just have a look at it to, and if any query is there, you can please put it in the chat box. These are the different receipts which urban body gets. Most important among them being the receipt from water supply, solid waste management, health services, and so on. The list continues. We have also discussed about National Municipal Accounting Manual with the guidelines for the preparation of budgets, and the budget monitoring is done on the accrual processes. The procurement and expenditure control. It is essential for the budget to be linked to the accounting system and the MIS. Here comes before you the list of accounting standards for local bodies. A specific list of accounting standards as applicable to local bodies is here. Next come to expenditure management. Under it, we have the service level benchmarks. Benchmarks are the simply the performance indicators which are required for the services level to be reached as per the ULB. They have been developed by Ministry of Urban Development, previously as it is known as, and now it is Ministry of Housing and Urban Affairs, MOH. UD has been substituted by MOH UHA. They are the parameters, the performance parameters. The standardization of the parameters help to look for the reliability of the measurement of the water supply services, sewerage services, and so on. The list continues. This is the opportunity available to the CAs, the appointment of internal auditor for the ULBs. As we have discussed, the report will be published on the ULB website as per the Amrit Guidelines on Urban Reforms. Managing the municipal assets and liabilities is fundamental to achieving the financial stability. What are the assets in this case? So assets are the land, buildings, roads, water supply infrastructure, public amenities, while liabilities comprise of contractual obligations, loans, and outstanding payments. A key reform in asset valuation under the double entry accounting system involves real-time tracking of the assets, proper documentation. We are not having the power just now. There's a power cut in the area, so only small lights are functioning. Dim video is there, understand that. So we were talking about asset valuation. Thank God. So a key reform in asset valuation under the double entry accounting system involves the tracking of assets. And how the assets will be tracked? We can use the ABC analysis. As we all know, when we have studied in cost accounts, ABC, inventory management, then the assets were classified into high value, medium value, and low cost items. High value items, but occupying a very small space. The other category being value is small and take up a large area. For example, the street lights. Now the installation and maintenance of street lights have been sublet under PPP model, public-private partnership model. So the old street lights were dismantled and they are placed in RR workshop of an urban local body where all the stock is placed. They occupied a significant area and they are left in open space only. And how the scrap value is very, very low. So such assets are low value, example of low value item. Similar is the example of carts, trucks, or other small vehicles that were previously used for waste disposal, and now the target of waste disposal under the has been given to PPP model. New vendors have been hired for the same, and the owned vehicles are in scrap position, and they are again a low value item. So such they are assets, still they are assets, but occupying a very low value. The balance sheets of the ULBs were prepared since 2012. This work is ongoing. Some important municipal corporations in this regard were Ahmedabad, Indore, was the part of asset management. Then speaking about the liability management. What are liabilities? All the outstanding payments which are to be done. They should be recorded on an accrual basis. Any long-term liabilities, any loans which the ULB might have undertaken should be properly structured and to be repaid on scheduled time to avoid any penal interest. What to do with the contractor bills? Such bills and any other payments due to the vendors are to be tracked on a real-time basis. For this purpose, there has to be a mapping of assets. Valuation of fixed assets is one of the most important exercises for the preparation of balance sheet of any organization. When the accounting manual were framed, then the esteemed members of ICI were involved in the same. As per the manual, details of the asset should be given department-wise, location-wise, and a form was designed. The number was form number 10, which was assigned for this purpose. The form was given to each department which for properly filling and signature by the competent authority of the department. The CAs were appointed as the field level consultants and the value of assets were extracted with its help. Just coming before your screen is example of a sample of an annexure to such a challan for valuation of assets is so by implementing these strategies, ALM strategies, assets and liability management, better financial discipline can be there. We minimize the risks. Also, the resources are optimally utilized. Additionally, we are recording the transactions real time. This ensures that the liabilities are efficiently tracked and all financial obligations are met in a timely manner. We all know that India is experiencing rapid urbanization. The reforms in urban local bodies are necessary for the economic growth. Transition from cash-based to accrual-based double entry accounting system is essential for transparency and accountability. One might say that these small acts are not enough. We need radical, systematic changes to address the complex problems we are facing. And they are not wrong. We do need a systematic change. But systematic changes do not happen in a vacuum. It is driven by collective efforts. by countless small acts. So I would urge you that don't underestimate the power of these small reforms. Don't dismiss the impact they can make. We have to embrace the opportunity that is coming to us. We as chartered accountants have a role to play in this. Lot of trainings are being conducted. The staff is being trained to handle the double entry accounting system records. There is scope of work for us. Field level consultants are being appointed. Who are these consultants? They are chartered accountants. To fulfill the obligation of preparing these 4 statements for a ULB, the income and expenditure statement, the receipt and payment account, the balance sheet, and the cash flow statement. For these, first of all, the budget will be required. Second, assets and liabilities are to be mapped. Then the accounting will be done with the help of PFMS, the web-based real-time online accounting system, similar to virtual banking as we all are doing these days. The double entry will provide the transparency, the accountability, and the efficiency. The outdated single entry system had certain problems, including data inconsistency. In this digital world, data inconsistency cannot be tolerated at any stage. Data inconsistency means one record is showing a particular value at in certain books of accounts and the value is different in some other records. That is to say, all records have to be consistent with each other. All the same figures have to be there in all the records. They have to be synchronized. Data has to be consistent now. The entire data has to be synchronized, and this is possible only with the help of a online accounting system which are based on double entry only. No single entry accounting system is possible now. We have now technology driven solutions, cloud based accounting systems are there, ERP platforms are there. The municipal organizations can enhance their transparency, and this will help in better decision making and further optimum utilization of public fund. After all, the major source of revenue is tax based system, and who is paying these taxes? The public is paying, and they have to be accountable for the public money. Although they have some non-tax revenue also, as we have discussed in a little while back, and they earn a part of their earnings with the help of grants received from state government and central government, State Finance Commission SFC. And it was the 12th Finance Commission which laid down the essence of double entry accounting system under JNURM, which is quite a time back. So we can say that the double entry accounting system is a game changer for urban local bodies. It enhances the financial transparency, accountability, and efficiency, ensuring that the public funds are managed properly. With the proper budgeting, internal audits, expenditure management, service level benchmarks, these urban local bodies can provide better infrastructure, sanitation, and essential services to the citizens. The introduction of the automated financial system, audit compliant accounting standards, and real time tracking of financial transactions has further strengthened and the financial management of the ULDs. So here we come to the end of the discussion on double entry accounting system for urban local bodies. How these reforms can be implemented effectively in municipal financial systems, driving better governance and urban transformations. We are open to any queries the members may have. Thank you so much.
Ma'am, there is one question. How to apply for PAN card for local bodies? It is like every panchayat or municipality and panchayat is subsidiaries.
You have given the option correctly. It is like every panchayat one. You have yourself given the answer. When
There
you
is
apply,
another question. There is another question from
please.
the audience, ma'am.
Yes, please.
Can you explain the concept of provision for fixed assets in the books?
Why not? How do we account for a fixed assets in the books? You should know, you are supposed to know the cost of the same. And in case of these organizations,
Okay. Is there
in
any
case,
other questions?
please let me complete the answer.
Yeah.
The fixed assets for whom we were unable to find the cost. Okay, books were not available, no records were available, and even the notional value could not be found. Then, in that case, we assigned the value rupee 1. Rupee 1, they were put up as the notional value for the fixed assets. For this was the last step. Okay, first we tried to find out which sub department was using that particular fixed asset. Maybe it was a small fixed asset, example a chair or table. Then we got the numbering done, and if a sub department is using the same asset, then the value was, they will give you the idea when it was purchased, what was the cost. If no records are available, then as per the market value, their value was determined and they were depreciated according to the time they have been put to use. However, in case of certain assets, no data was available. It was the final recourse that was taken, and that they were put up at notional value. So many urban local bodies are running municipal schools. They have a lot of infrastructure and fixed assets are there. Large stretch of lands are there, buildings are there. We tried to find out a value for the same, and the head of the such a school certified document was taken as the evidence of valuation of the fixed asset. Thank you.
Thank you, ma'am. I would like to inform that over 650 people got benefited from your insightful session, and I really appreciate your time and expertise. Thank you so much, ma'am.
Thank you.
Okay. Uh, Let me introduce our second session speaker, CA Tanuj Jain. He is a qualified CA and a DISA holder, having a post qualification experience of more than 11 years and practicing since the year 2019. He specializes in all kinds of audits and has long experience in Ind AS, IFRS, Indian GAAP conversion, financial reporting and analysis, Companies Act, risk advisory and compliance, and bookkeeping and reporting. During this span of experience, he was with KPMG into Indian audit practice for around 5 years and handled listed and non listed entities. He was also with EY for around 2 years into accounting advisory services. He also has a deep understanding of internal control and process change requirements. He has analyzed the impact on processes due to various accounting changes as a result of group or statutory compliance and is also active trainer and has been a regular trainer on complex accounting standards and financial reporting requirements. Welcome, sir.
Thank you so much, Aishwarya.
I would like to inform that, over 650 participants have joined already.
Perfect.
So, yes, welcome. You can start the session.
So, thank you so much again, Aishwarya. And thank you, CPE committee, for giving us the opportunity to take the session. Right. So, as you all know, I'll just share the screen first. One second. Hello, is my screen is visible?
Yes, yes.
Perfectly well. Sorry, some challenges there. Okay, that's it. So, thank you once again, Aishwarya and the CPE committee for giving me the opportunity to speak on this platform. So, okay, as you all know that the topic is on the significant beneficial ownership, which is covering the provisions of Section 89 and 90 of the Companies Act 2013. So let me tell you, this is one of the complex provisions I've read, recently, and it requires a lot of reading, a lot of understanding to kind of understand. So today's session, which I'm going to take, is basis on my opinion, basis on my interpretation of the law. I may be wrong because there are some ambiguity which will require everyone's help to kind of understand. And I want this to be a very learning session for all. So with this, I just want to start the session. Okay, so before we jump into the provisions of the significant beneficial ownership, it is very much important, right, to understand the purpose or the objective of the law, that why this came into picture, right? So I'll not take much time, but then yes, it is very important to understand. As we know, the basic structure of a company is of the artificial legal entity, which means it is separate from their members, right? board of directors and members act separately. And we have also seen that a artificial legal entity hold shares into another artificial legal entity, right? And then that another artificial legal entity holds into third artificial legal entity, then the third into fourth, then that fourth into fifth, and this complex chain of holdings keeps on continuing, and it is very difficult to identify who is the actual owner behind this corporate vehicle, right? Because at the end of the day, company can't run itself. There should be someone behind this corporate vehicle who is running the show, who is taking the management decisions, who is controlling the whole gamut of transactions and business, right? So let me take one example. I'm sure everyone has heard about Panama leaks, Panama paper leaks, right? I'm not sure whether anyone is saying, because it's a one-way interaction. So I'm assuming everyone knows about the Panama leaks paper. I'll just give an example what has happened in that. So let's say there's one person, Mr. X, who is in Bangalore, right? And he's an illegal person. He earns money through drug dealing, through extortion, right? And he has a lot of money. Now he wants to convert that money into white money, legal money, right? So what he'll do, he'll invest that money into, let's say, one entity in Singapore, a shell company, right? And that shell company will do its business, file their returns, compliances in Dubai, and make that money into white, right? Then again, that Dubai company might definitely will invest into a Singapore-based company, again a shell company, right? And then Singapore company may invest in the Panama Islands company. And then that Panama Islands company may invest into a Mumbai-based company or a Bangalore-based company. So what is happening here? I mean, the money has been routed through one company to another company to another company into different countries, and then getting back in India, right? And so basically, money laundering is happening here. Benami transactions are happening here, right? Tax evasions are happening here, right? Through mere entry or transactions in the books of these companies. So it is very much important to identify or to hold accountable some person, some natural person, right, who is running the show behind all these things. Otherwise, there's a very complex web of holdings is there. I mean, I've just taken an example of, let's say, 4 to 5 entities. But imagine if there's a structure where around 25 holding companies are there, right? 25 companies are there in a structure. It will be very difficult to identify who is the natural person who is running the show. So basically, to hold accountable someone, or to increase the transparency in the system, right? So this is one of the objectives. Then another is, yes, to reduce or to curb the misuse of the Benami transactions, money laundering transactions, to curb all such transactions. Then one of the objective was, let me tell you one more thing, that these transactions are not only in India, this happens globally, right? So, and this has been happening from a long period of time. So that's why globally, one initiative has been, one group has been extracted, which is Financial Action Task Force. What they do, they are collaborating with different countries and trying to reduce such kind of transactions, trying to identify the natural person, the ultimate beneficial owner, basically, right? And these provisions in India are the commitment towards these Financial Action Task Force. So these are some of the objectives because of which the section 89 and 90 has come into picture. Let me tell you one more thing. These are not the new provisions. These are already there in 1956 also, through some or the other way. This is there in SEBI laws also, which is guidelines on the ultimate beneficial ownership. There is some related law in RBI also, which is Know Your Customer. There are laws in prevention of money laundering, Benami transactions, and recently it has been introduced in LLP Act also, right? Okay, so now I'm sure people might be wondering why there are disclosures related to related party disclosures. What about that? Are we not covering all such things through related party disclosures? Let me tell you. I mean, identification of a natural person is not covered through that. Through related party disclosures, we only talk about, or we only disclose about the holding company or ultimate holding company, fellow subsidiaries, associates, joint ventures, and related transactions. So identifying a natural person behind this corporate vehicle was difficult earlier, right? So that's why these provisions has come into picture and making it more stringent. In fact, MCs has been shared a lot of notices to a lot of companies asking, to give us these related forms and all. So this is the purpose and the objective why this significant beneficial ownership or Section 8990 come into picture. Now I'll jump on to provisions of these sections. So first is about Section 89, which is easier one as compared to 90, because 90 is one of the most complex sections. So what does Section 89 talks about is identification of beneficial ownership. Let me tell you one scenario when it is applicable. Let's say there are three persons involved. One is a company, let's say XYZ. There's one individual A who is holding these shares, and his name is entered in the register of member as holder of that share in the company, but who does not hold the beneficial interest in that. And then there's another individual B who is actually acquires the beneficial interest in that company. Yes, it is possible, right? Let me give you another example. Let's say one HUF is there, right? HUF can also invest in the company, right? So now, if let's say an HUF is investing in a company or acquiring shares of the company, can it obtain the beneficial interest out of that HUF? No, right? It can't. But the Karta of the HUF definitely obtain the beneficial interest of those shares. So this is one of the case. Similarly, it happens in trust also. Different types of trust. Trust can acquire or hold shares, but trustees or beneficiaries or settler will, depending on the nature of trust, will acquire the benefit out of those shares, right? So basically, in Section 89, we are talking about identification of beneficial owner. And in that case, there are some forms to be filed. I'm not going to jump into the details of the forms, but yes, registered owner has to file MGT4 within 30 days. Beneficial owner has to file MGT5 within a similar period of time. And as and when company receives these forms, company has to file within 30 days the MGT6, right? Now, secondly, in this section also talks about beneficial interest in a share. And this section, this beneficial interest in share also, will be helpful or will be used for Section 90. Now, what does it mean? I'm sure people might have understood beneficial interest in the share, something related to rights or attachments, right? The bonus issue, the rights issues, the dividend participations, these kind of benefits are there, right? So what does the definition says? Beneficial interest in a share includes right or entitlement of a person. I've bold person. So what does it mean? It includes all types of entities, whether it is HUF, whether it is companies, whether it is an individual, right? So right or entitlement of a person alone or together with other person. Alone we understand. Together, how is it possible? People might think, right? So together means there can be joint arrangement between two individuals, between two companies, a joint shareholdership where they acquire the benefits together, right? Two, exercise any or all of the rights attached to such shares, right? Rights we have already discussed, rights issue, bonus issues, voting rights, right? All these rights, or receive or participate any dividend in respect of such shares. Right? I hope it is clear to everyone. And beneficial interest can be acquired directly or indirectly through any contract arrangement or otherwise. Indirectly means through some, maybe a multi-layered chain of companies are there, and then you are acquiring that interest, right? And Section 89 is applicable to all types of companies. There is no threshold. Even if one share been held by registered owner and the beneficial owner is different, they have to kind of file their forms, and they have to tell to the companies, and companies has to tell to the authorities that yes, there's one share where registered owner and beneficial owner is different. But in one case, I think Section 89 is not applicable, which is in case of a trust which is created to set up a mutual fund or venture capital fund. Okay. So now the next section, which is the complex one and the important one, about Section 90, which talks about significant beneficial owner. Right. So in Section 89, we had talked about even if one share held by owner, and it is applicable. But in this case, there's some difference, right? So let's first understand what is SBO. So this section starts with the first word, that individual, right? In that case, it was person. So it was applicable on every person, whether it is a company, whether it is HUF, partnership firm, trust, anything, right? But it is talking about individual. So it means what? It is applicable to the natural person, to the individual, right? And the company. So both has to comply with some or the other provisions as per the law. So every individual acting alone, either he is acting alone or together with one or more persons or trust in India. So, which means what? He can with another person also, he can acquire those shares, and that person can be in India, right? Or together with the trust or a person resident outside India. So it means what? It is applicable to persons who are resident outside India. It is not something that it is applicable only in India. Most of the sections or provisions of the Companies Act are applicable only, for the residents in India. But this is one of the sections which is applicable on resident, which is outside India also. What does it say? Which holds beneficial interest. Beneficial interest. We had already discussed in this section 89. We are taking a reference of that, which holds a beneficial interest of 25% or as may be prescribed. Right? In the rules, there are rules also related to these provisions, which has been prescribed by the authority, right? Or right to exercise significant influence or control under Section 220, Section 2, subsection 27. Right? So now we have to understand, as per the rules, basically these percentage has been changed, which says more or equal to 10% of shares, or more or equal to 10% of voting rights, or more or 10% of distributable dividends or distribution. So these are the beneficial interests in a share. If a person holding the share, so if he has 10% or more of these benefits, he will be called as an SBO. Or there's another way to identify an SBO. Let's say if he has right to exercise or actually exercises significant influence or control. Now, normally we had read significant influence in the sections of provisions of associates, but we can't refer that definition. We have to refer the definition which is given in this provision, and from that angle, I mean, if let's say a natural person, even if he is not holding any percentage of shares, but he has right to exercise significant influence or he has control, in that case also he will be called as a significant beneficial owner, right? So let me elaborate through another flow chart, which also simplifies this section 90, right? So again, we'll see if any individual, along with or without any artificial person. We had already discussed individuals can be with any other artificial person, holds indirectly Now, in this case, indirectly is really important to identify a significant beneficial owner. Indirect holding of shares is really important. In Section 89, it was only direct, but to identify a natural person, indirect holding is important. Now, holding indirectly how? Through body corporate, any HUF, any LLP, any trust, right? Any shares, voting rights, dividend rights, or significant influence or control in a reporting company, along with or without any direct holdings in such reporting company. He can have direct holdings as well. So if let's say you combine together the indirect holdings and direct holdings, and if he crosses more than 10% in case of beneficial interest, then he'll be called as an SBO. Or let's say if he's not holding any shares, but he exercises significant influence or he has control in that company, then also he'll be called as a significant beneficial owner. In that case, that person has to file, that individual has to file when one to the reporting company. So this is the section 90, right? Now, I hope it is clear somewhat. Now let's talk about significant influence. What is significant influence as per these provisions? So significant influence means power to participate directly or indirectly in the financial policy decision and operating policy decisions of the reporting company. But it is not control. So it is a lower type of power as compared to control. But yes, he has some kind of influence over the financial policy decisions of the company. So this is what significant influence as per the rules of the SBO. Then control, which is defined under Section 227 of the Companies Act. What does it say? Control means what? A right to appoint the majority of directors. If a natural person, if an individual has right to appoint the majority of directors or right to control the management or policy decisions, in that case, that person, that individual is having a control, and which is exercisable maybe by person or persons acting individually or in concert. Concert means in group. It is also possible that 2 or 3 people together, acting with a common intent, and they are exercising control. That is also possible. And how is this possible? Through some kind of shareholding agreements, through management rights, right? Through voting agreements. Such kind of things can be done, and individuals or companies together can exercise controls over the company. Now, so I hope it is clear now. Section 89 talks about if there's a difference between a registered owner and a beneficial owner, then yes, a person has to file those forms. Section 90 talks about significant beneficial owner, in which he should have indirect ownership also, wherein he has to file Ben form if he's holding more equal to or more than 10% of the voting rights or the shares, or he has significant influence or control over the company, right? Now let's talk about some cases where how to identify, the SBO. So in this example, which is he's holding directly, let's say ABC Private Limited has only individual shareholders and no indirect shareholdings. Will he be SBO? No, right? Because indirect shareholding is required to call him as a SBO. Second case. Now HUF as a shareholder. In that case, what happens? Same example. Let's say ABC Private Limited has HUF as one of the shareholders, right? Whether now what we have to do, we have to identify whether HUF holds more than or equal to 10% of the ABC Private Limited. If yes, then Karta of that HUF is a significant beneficial owner. If no, then no further action required, right? Then third case, firm as shareholders, partnership firms, right? So let's say again, same example, ABC Private Limited has firm as a shareholder, firm holding equal to more than 10% of the company. If yes, then all the individual partners are SBO. Clear till that level. But there's a change. Let's say if partner is a body corporate in that firm, if partner is a body corporate, then we have to find out individual holding in that firm is more than 50% or not. if the individual holding more than 50, if the individual holding 50% or more in the body corporate, then you have to identify if going up the ladder, if he holds 50% or more, then yes, he is an SBO, right? So in that case also, if that is the case, then he'll be an SBO, otherwise not. Same way, trust as a shareholder. Now, ABC Private Limited, again, trust has holding more than 10% or more as a shareholding. If yes, that is the case, then trustees or beneficiaries or author of those trusts will be called as a significant beneficial owner, right? Depending on the nature of trust, it will be decided that who is actually getting the benefit from the trust, and then accordingly, that individual will be an SBO, right? Then let's say company as a shareholder. Now, what happens where the member of the reporting company, we have to always think about, we have to take always a top to bottom approach. Always the lowest company in the chain will be called as a reporting company, and the person who is at the top, the individual, right, the natural person, will be an SBO if these conditions are met. So where the member of the reporting company is a body corporate, whether incorporated or registered in India or outside India, and the individual holds majority stake in that member, right, or holds majority stake in the ultimate holding company, whether incorporated in India or abroad, then in that case, that individual, that natural person, will be called as a significant beneficial owner. Right. There are some ambiguities in this. Probably I'll take up in the next section, in the next slides. Now let's see some of the other examples in relation to body corporate. Let's say there's Mr. A and Y and X Limited. X Limited is a reporting company. In that, Y Limited holds 10% or more, and Mr. A holding more than 50% in Y Limited, which is as per the condition. If it is holding more than majority stake, then he'll be called as an SBO, right? Then second example, let's say if he's holding in the majority stake in the ultimate holding company of such body corporate. So again, a little typical example, X Limited is a reporting company. Then in up the ladder, there's Y Limited who holds 10% or more. Then there's Z Limited, who is ultimate holding company. And in that company, there are three individuals who are holding shares, Mr. A, Mr. B, and Mr. C. Mr. A holds majority stake holdings as compared to Mr. B and C. So as per the provisions of the law, as per the provisions of the Section 90 and rules, Mr. A, since he is holding majority stake in the ultimate holding company, he'll be called as an SBO. Now, there are some ambiguities in this, I have heard a lot of people during this period of time, and someone says in the chain of, let's say there are multiple body corporates are there in a company, and they are holding shares in another company, and that company is holding share in third company, and then third into fourth. The chain will break if none of the companies are holding majority stake, right? So it will be, this is one of the view of the people who are interpreting the law. Then there is one of the view is about the effective ownership. Effective ownership means what? We have to understand whether that natural person is holding 10% or more of the shares or not, irrespective of whether the intermediaries or the intermediate companies are holding majority stake in the below company or not, doesn't matter. So there are two views. Let me just show you how. So individual holding indirect stake in multiple companies. We'll see this example. Let's say Mr. D holds 40% in X Limited and 30% in Y Limited. And X holds 50% in Z Limited, and Y holds 50% in Z Limited. And Z holds 60% in A Limited, the reporting company, right? So there are only 3-4 companies in the chain. So obviously the belowmost company would be the reporting company, and the topmost, the individual, would always we have to identify whether he's a significant beneficial owner or not. So now how to identify? Since X holds 50% in Z Limited, but D does not have a majority stake, right? And Y holds 50% in Z Limited, but again, Mr. D does not have a majority stake in Y Limited as well. So as per one of the views, since majority stake has not been held, even though Mr. D indirectly holds a stake of 12%, which means let's say 40% into 40% into 50% into 60%, which comes to around 12%. In that case, also he will not be called as an SBO. Why? Because he does not hold a majority stake in any intermediary level. So this is one of the view which says an individual must. So the first point is important: an individual must hold a majority stake, which is intermediary body corporate. But if an entity in the chain does not have a majority stake in its next level, the SBO chain breaks. And if the SBO chain breaks, you need not to calculate the beneficial interest of the individual, and SBO provisions will not be applicable. So this is one of the view. I believe effective ownership should be calculated, wherein irrespective of whether the intermediary companies are holding majority stake or not in the below company, but still, if the individual holds more than 10% directly or indirectly, the SBO provision should be applicable, and he should file when formed. Right? Now let's see one more example, wherein what happens: C Limited is a reporting company, and in which B Limited holds 10% or more, and A Limited is a ultimate holding company of B Limited. Now Mr. XYZ, everyone is holding 33%, 33%, 33%. Now there is no majority stake in this case, because as per the provisions, individual has to hold majority stake in the ultimate holding company or below just below him. It means where he has invested, he should hold majority stake, basically. So now in that case, we have to understand whether XYZ are acting alone or together. If they are acting together, then combining together XYZ will be called as an SBO. Now, how to prove that? So everything should be documented through some or the other papers, through some or the other documents. Just on air, if you say, oh, Mr. XYZ are acting together, doesn't mean that they will be called as an SBO. Yes, if there are documents to prove that, always you have to see documents, and if the documents are there to prove that, then yes, they will be together as an SBO. Right? Now, next concept of holding beneficial interest through any person. Now, in this case, what is happening? Again, C Limited is a reporting company in which B Limited holds 100% or more of the shares. There is one ultimate holding company, A Limited, who holds 100% again. Then there are Mr. XYZ holding 33%, 33%, 33%. But let's say there's and all of the three are basically driven through an individual, Mr. D, right? Which means what? They are the D at the end of the day is taking or having significant influence or control, and he's making the decisions. XYZ are asking him to, what to do for the daily routine transactions and all. So in that case, if this can be established, then DD will be called as an SBO, right? Let's see. So these are all the examples, and these are all the cases or provisions which has been, will help to kind of understand the SBO provisions. Now we'll talk about the compliances a little bit. So what all the compliances are there from a SBO perspective, significant beneficial owner perspective? He should file Form Ben1 to the reporting company within 30 days as required. And what company needs to do? Company, as and when it receives Ben1 form, he should within 30, again, from that within 30 days of time, he should file Ben 2 with the ROC, right? And company should also maintain a register in Ben 3. Now, there can be one instance where company didn't receive any Ben 1 or SBO not identified. Then what are the provisions in that case? Yes, that can also happen. Maybe individual is not disclosing the, it's his or her identity. In that case, what will happen? Company shall give notice in form Ben 4 to whom? Let's see, if company knows or has reason to believe that person to be a significant beneficial owner, if company knows or has reason to believe, then yes, company can give notice in Ben 4 and can ask to clarify, right? Or company knows or has reason to believe to someone has knowledge of the identity of a significant beneficial owner, or any other person likely to have such knowledge. So in that case also, company can the person, correct? So these are some of the provisions or some of the compliances which are required, as per the SBO provision. Now, this is also the next slide is on the role of the professionals. Now, what are our roles? I know this is these provisions are more or less very much important to a company secretary, but at the same time, it is also important for chartered accountants as well, at least to know, during the case of audits, we as an we always find such kind of cases. So, what are our roles basically? So, auditors during the audit of the company has to check whether there's any body corporate as a shareholder of the company, right? We have seen in the disclosures of the shareholding company that there are corporate shareholders who are holding 99%, 50%, right? So if, let's say, as and when you find out, we have to check whether Ben 1 is received by the company or not. If not, then company has sent notice to such persons or not, right? So all these things we have to kind of understand. Now, from a company's perspective, there are management, there are directors, right? They also have some kind of responsibilities wherein they should check if there's any beneficial owner or beneficial owner of shares of the company or not. If there's any holding company or is there any subsidiary company. If company having any holding company has to follow that process, which is mentioned that they have to give notice and all if no Ben 1 has been received. Right. So this is the role of the professionals in this case. So more or less, I've tried to cover the provisions of the law, but there are some, I'm trying to cover some other things through FAQ, wherein now first would be what would be the meaning of shares. Now we had talked about, if he's holding more or equal to 10% of the share. But what does that share mean? Share includes equity and below also. Let's say global depository receipts, compulsory convertible preference shares, or compulsory convertible debentures. These are also has to be covered while calculating the criteria of 10% or more, right? Whether it is applicable to all companies, yes, it is applicable to all companies, whether it is small, private, listed, Nidhi company, producer company, it is applicable to all companies. Whether SBO rules applicable on person resident outside India, we had already discussed. Yes, it is applicable to a person resident, non-resident as well. Yes. There are some exemptions also given to an SBO applicability. What are those exemptions? So let's say the first is IEPFA, which is Investor Education Fund, right? So in that case, let's say in some cases, company has to transfer their shares to investor Provident Fund Authority. In that case, yes, the IPFA will not, file any Ben form. They are not supposed to. They are not obliged to, file the form. Second point is it's holding reporting company. Right. So since we have discussed a complex chain of structure wherein there are multiple companies are there. So SBO provisions are only applicable to the lowest possible company in the chain, right? And whatever intermediaries are there and they are holding companies, then in that case, it will not be applicable to those intermediaries. Only to the lowest possible reporting company in that chain, it will be applicable on them, right? Then yes, government bodies, it will not be applicable on them if they are holding any shares. SEBI registered investment vehicle, mutual funds, REITs, all these investment vehicles regulated by RBI or IIT. All these entities also, it will not be applicable to those if they are holding equal to more than 10% of shares. So this is the one example of holding reporting company, that how it is not applicable to them. Let's say B is a reporting company and there's holding reporting company A Limited. And then there's Y Limited, who's ultimate reporting company. And there's Mr. A, right? So as per the criteria, if Mr. A crossing the limit of equal to more than 10% directly or indirectly, he will be what do you say, SBO, and he'll file the will file BEN 2 to the ROC. And then any, let's say A Limited, which is the holding reporting company of B Limited, will not require to do anything as per the provisions of the company, provisions of the law. Maybe just to avoid the duplicacy of the provisions, because already in a chain, authorities or the through this governance, people will already get to know about the whole chain and about the significant beneficial owner. So with this, I've tried my best to kind of explain the significant beneficial ownership provisions. As I told you, this is a little complex and it requires a lot of understanding, a lot of reading, and that's why there was one ambiguity wherein whether in intermediaries has to hold majority stake, or we need to check the effective ownership of the individual to see whether he's holding 10% or more. We need to understand that. But yes, more or less, these provisions talk about this, right? While saying that, I also want to say that not always these multiple chain-led complex entities doesn't do all such things, right? These multi-chain web of holdings is the requirement of the time, right? This has been evolved during the period of so many years. Let's say if you see an example, if a company wants to segregate their one chain of business, one product, so they have to demerge it. And let's say they want to segregate their geographical location, they have to demerge it. So with this kind of thing, companies will be created, and there will be multi-chain of holdings, and that is perfectly okay. But yes, it is very much important to identify if any individual using these corporate vehicles to kind of do any such illegal activities like money laundering or benami transactions. So from that perspective, yes, this is very much important, and these provisions would be helpful. So with this, I thank you everyone, and yes, thank you so much.
Yes, let's wait 2 minutes for questions.
This is a little complex provision. Even I have read so many times, and it was a little difficult to, interpret those laws, the provisions. I've tried my best. I'm not
Yes.
sure. Yeah.
I guess you have explained very well that currently I'm waiting for questions, but everyone is just admiring you that you have explained all the complicated provisions interestingly and with the help of flowcharts.
Thank you.
Okay. So I would like to thank you for your clear explanations, and you have enhanced our understanding for this topic. I truly appreciate your valuable insights. Thank you so much, Tarun sir.
Thank you. Thank you so much, Aishwarya. Thank you so much, CP.
Yeah.
Thank you.
Yes. So, of course, the PPTs will be shared, and we have one question. HUF has to file Form MGT 4 or 5 or band 1 in case it holds 15% or 51% shares in a company.
Okay. Both the sections are totally together, totally different. Section 89 talks about MGT 4 and 5, right? And Ben 1 is under Section 90. So yes, if HUF is a register, if HUF holds any shares in the company, definitely Karta would be the beneficiary. So yes, HUF has to file MGT 4, and let's say combining together with the direct holding, if there's an indirect holding also of the Karta, in that case, Karta has to file Ben 1 form.
Okay. There are no other questions, and then I would like to conclude this session. Thank you so much, everyone, for joining us today.
Thank you so much. Thank you so much.
Thank you. Yeah. Yes.
Thank you, sir. Thank you, ma'am.
I can leave, right?